Hello traders, Nick Shaheen here looking at this stock. What, you don't recognize it? What's the craziest ticker this week, huh? Yeah, it's the Gamestop. I can't believe I waited this long before I did a video on it. But been busy in the chat room going at 260 and strong. You can try it out. It's not free to be in it, but it is free for you to test it out for 10 days. Link is in the description. The transaction goes through PayPal, but it's zero. And the only reason I do it is I want to make sure that we get real people who are serious. I mean, I owe it to my people in the room to protect their interests in there. So back to this chart. So crazy week, good week if you were prepared. We were definitely prepared. We owned VIX calls, we owned debit put spreads in the SPY and the IWM, and then we also traded this bad boy. We did not gamble that bad boy, that's for sure. But it's interesting to see what's going on. So this is a weekly chart. I always like to do that to see perspective. Has it happened before? Anything? It hasn't. But also to point out something. So this is the volume profile. I know there's a lot of volume here, but it's not even a blink compared to the whole year. So according to this volume profile, the busiest place that it's traded is around 13 bucks. So clearly whatever's going on right now is highly unusual, and it doesn't even register yet. It hasn't had time to mature. We'll see what happens on Monday when they refresh the data. I'm not sure about that. So zooming in, trying to I will get to the part where I will share levels, but first I want to lay out my perspective so you know what I'm doing. So I'm currently shorted, but not by sold stocks or anything. Don't feel sorry for me. I've doubled my money, and I'll explain to you how. This is just insanity. I love it, but it's insanity. So on the way up, I saw the breakout from the chart's perspective after it started being active, but it wasn't in the hundreds yet. And I bought a debit call spread and shorter term, but I also invested in buying puts out to March, middle of March they expire, which is a March monthly. The $30 level puts, they cost me about $4 a piece. And I bought a debit call spread, and then price burst through my level, so I went to close it with E-Trade and it wouldn't fill. So I kept moving the price. I gave up some of my profits and it wouldn't fill because that was the day it went bonkers, the first day or two, I can't remember. And then I said, all right, forget this, I'll try it later. And I hit cancel and it canceled. And then I went back and then the price blew up again. And I was like, okay, maybe I'll try it now. It still wouldn't fill. And then I tried the third time. I came back. The call spread is gone. So they decided to fill me even though I hit cancel several times. So anyway, end result ended up was a small profit, nowhere near the maximum value, which would have been the whole spread. And bottom line is my net cost to the puts is $4. And I'm rounding. It's a little bit less, but I'm rounding to 4. So because I wanted to make the most out of my money, I sold puts, which is a bullish position for this Friday, which expired. Today is 129, so they expired. They died in my favor. I bought them back for pennies, but what I did is, because I own an asset out in time, I was like, let me put it to work by selling an asset shorter in time. Same concept as selling covered calls, except in this case I'm covering the put I have, and I collected 60 cents. And so now whatever cost I paid for the one out in time is 60 cents cheaper. So I'm still short the stock. I'm basically double my money right now, all because of the implied volatility explosion that happened in the stock. The put buyers are making money at the same time the call buyers are making money. Not at the same rate, but they're both winning. It's almost a no-lose situation. So I'm not recommending anybody do this because it's Adult Swim only with this madness, but I am not selling the stock short. But now you know that I would benefit from the stock dropping. So whatever I say here is, maybe I'm speaking my book, but I'm not trying to. Okay, I'm not here to convince you to short it. In fact, how about this? How about we do something stupid? What? Fundamentals? Yeah, why not? So this is a business that lost its gross the gross profit is cut in half since 2016. Revenue from 8.6 to 5.2. So can we all agree that it's a dying business? That you can argue that they have something in the works or whatever. This is a dying business. I'm not sitting around trying to make the fundamental thing against it. This is part of the thesis of what goes on from here if the madness dies. The net income went from positive to negative just as much. So the swing is mirror image. Statistics. Okay, there's no PE because it loses money. And the price of sales is 2.5. However accurate that is, it's not crazy. It's not cheap, but it's not crazy. So that alone is not a reason to short it. But the fact that it's a dying business, it's not a reason to pay up 10 times for it. That's my point of this, right? So take away the madness, the short squeezes and all of that. Reality has to set in, and it's going to come back down to life. So I'm not going to explode in profits, because if this madness dies, the implied volatility dies. So first lesson is, what is that implied volatility? So what are we looking at here? GME. So you've heard of the VIX, and you know that it represents volatility in the market in general, right? The implied volatility is basically the quote VIX for particular stocks. There it is right here. This is E-Trade. I don't recommend it. I use it because I've had the account forever. So 600, you rarely see these numbers. It's just crazy, the implied volatility. How crazy is this? Okay, so Apple today fell, did I say already 129? The market fell 2%. VIX exploded higher, 10% or so, and Apple fell 3%. So almost 4%. So its implied volatility is exploded today, and it's barely 44 versus GME's 600 or whatever it was. So clearly, everything you buy and sell in the options for GME now folds over what it should be under normal IV, implied volatility. So if I guess the direction right and this implodes, this implied volatility disappears and goes back to normal, all the option prices that I have, the $30 level, will just disappear because I overpaid, because I bought them during crazy things. That would be the concept of, I need to time my exit properly. I don't want it to fall to 30. I want it to fall fast now, so I can bail. And right now the value is 7.4. It was 8 point something earlier today. How accurate are these? I got sold one or two, so I know they're there, but we'll see. Well, they're going right there, so one of these are at least is mine. Okay, so let's talk levels. Now comes the charts. I'm an engineer. I figured this crap out on my own, and believe me, I can play with the best of them. I may not speak the same language, but I challenge all of the levels that they can pick. All right, so we are looking at a 2-hour chart. So I will drill to other time zones, time frames. So I can tell you that, so these tails look like they don't want to be here, and these tails looked like they didn't want to be here. So now we have a difference of opinion. The bears were had good conviction up here and here and here, and now the bulls have conviction down here. Who's right? Right? So I think there'll be buyers if they come back down towards 225, but I think there's a date with lower levels still. So I see unfinished business from the candles. So is this a 2-hour? So let me see if I can see it on the 4-hour here to point it out. Whoops, what happened here? I can't see it here. Okay, so we'll go down to 60 minutes. All right. So now I have a field of play. The tip here, the tip here, so I know that's my sandbox, and then I have to find levels within that sandbox that make sense. First two things that stick out is right here. So 225 is going to be significant. So on the way down, if it approaches 225, if somebody wants to try to swing it up, that's where they try to catch it, and with a tight stop. Where's the stop? Wherever they want. Some people like to stop on dollar amounts. Some people like to stop at percent. Some people like to stop at levels. Like they say, if it loses this, I don't want to find out what's below it. That's one way to do it. There's going to be a fight over 165-ish because of this fail right here, and these two wacky candles where they had a big difference of opinion, they being the buyers and the sellers. The sellers were full of gumption here, and the buyers slapped them in the face. And so the buyers won that last fight. So next time they come here, the buyers are full of confidence because they just won a big battle here. And it's also going into a pivot, which is 150. So big gap up here that's no longer in play, but look at what happened inside the gap. These candles are telling. And these, they're going to try to hold right here as well. So on the upside, I said today, oh boy, I did not even, wow, check it out. Where did it close? 325. So yesterday, Thursday, I looked at the open interest and I said, if I were a gambling man, I'd sell the 330 call and the 50 put. And I would have netted a good amount of money, and I would have needed the price to close today between those two values. And it looks like it closed at 320 something. And look how high it went, 334, and it got smacked on its face. So my reading of the tea leaves in the open interest was pretty correct. I saw a wall in the open interest based on my interpretation, and that played out. Wasn't ballsy enough for me to play it, but it would have been a good play. Because, in fact, I think they wouldn't have let you sold naked calls. I did not even try. That would be just sheer madness. Let's see here. So active traders are probably looking at shorter time frame. So let's talk 5-minute increments. Okay, we've got clues. We have this floor at 195, so you can try to catch it next time it comes anywhere close. And this is where, if you don't get out going into 400, then you're gambling, unless you're chasing a particular pattern, which is entirely possible. So a break from 250 would cause me to try to chase it lower for a little bit. And this is where I would get out, because if it loses 250, they're going to come down to here and try to bounce and then fight over it and see if they can draw some sort of a neckline to go lower. If on Monday, if they try to get into this value, going into it, I would fade it the first time and then give it a chance to draw a right shoulder for an inverse head and shoulder to get up over 400. So it's going to be a big battle, and the 5-minute chart is pretty active. That's not my jam. I'd rather do some homework, find levels that I don't have to pay attention to minute, because I'm busy in the chat room, because that doesn't suit my style. However, people who are not leading 260 other people or trying to coordinate, then they they have time to look at, maybe you're a 1-minute guy or girl. So in this case, maybe you already saw some sort of a breakout here, 329.80. So 330 is a round number. So who knows what happens on Monday if it opens up above that. Then if you lose this one, you have to consider the fact that now you have a big exposure. So what is this? When you come down to here, bounce this hard, come back to it again and lose it, this looks like the shoulder to something. So let me zoom out. So I don't like, whatever you call it, that was me complaining about Twitter. I call bull there. I stopped tweeting, and I'm gaining followers faster than ever. So they must have bots. So whatever is going on coming in here bounces. Let's say it fails into it next week, running out of room here, somehow, and it doesn't bounce, or bounces smaller and loses it, goes below it. So that is not a perfect definition of an inverse cup and handle, but I don't like it when you lose a prior bounce level, a neckline that you fought over. Then there's a whoosh coming, and they'll try to defend it here. But don't be surprised to see it in double digits Monday or Tuesday. And I told you, I'm bearish. That's what I want to see. But even just looking at the charts, because I don't have a lot on the line because I'm already paid up. And so madness could end like this. Try to be honest with yourself. First of all, about the time frame with which you can trade. Not everybody is fast. So this is a 15-minute chart. It looks like an ascending channel, but boy, this is bunk information because it's not a channel. This is just a complete gambling tool right here. Look at this. Here's a level that's significant. What is that? 250. All right. So if you want to draw lines, Here's a level. These 3 candles matter, and this one right here matters. So I can, and look at this. Coincidence? I don't think so. 375. So I'm trying to find levels that will ring true to somebody. Different time frame people are looking at different things. Look at this. Prior fail, miserable fail, breakout zone. They come back and they hold the line hard. That is a significant level. So at some point, this is going to come into play. And as far as trajectories, let's say they come here and they hit, and then they do whatever they want. They come back to here. If they don't bounce, that's the problem I'm saying. Let's say they bounce a little bit and they come back to it. Now it's starting to look like a bearish thing, and then they'll come down to here. They'll do the same thing over here, and that becomes resistance on the way back up, and then they come down to here. So be honest with yourself. Don't fall in love with something. And there are some pretty bad stories coming out of this, and some pretty darn good stories. I mean, you've all seen the big stories in there. All right, so next sign. I mean, this is a long video, but we've covered a lot, including looking at the options themselves. So good luck with it, and you can comment all you want down in the section there. Every once in a while, I catch a ticker that has a lot of fans, and they just hit me hard. So if you want input on what's really going on out there, look, those 2 candles again. 315-ish, it's like Bitcoin. You can't say, oh, this level. You're going to say this zone. There's no level. There's a big zone. All right, next signing out.